course it does. Welcome to the Closing Beat, everybody. Happy Wednesday to you. How you doing out there? Excuse me. Hope all is well. And you're having yourself a good day there. We're going to talk about the stock market today. We are financial advisors that love to help you keep your dough straight. And the way we do that is by staying here and not playing golf. It kills me how many advisors are like not in the office. And we're not going to start off today by picking on other people. How about that? I will tell you that this, well, it'll be tomorrow now, actually. The week is going by quick. Tomorrow's Wine and Wealth class, that is a weekly class that we do for clients in our portal that we custom built. Our class is going to be on the digital dollar and the Fed Now program. We're going to go through the nuts and bolts of how each one of those work, the proposals, the actual legislation. Don't worry, I've cut out all the garbage. And go through, what's potentially coming and being proposed and actually happening at this moment, so you can make up your minds about, what you think. But rather than have the drama of all the news, we're just going to go through the facts, show you how it works, and you can derive your own beliefs and things from there. So I hope you'll enjoy that. The Fed Now and the CBDC coming up tomorrow are Wine and Wealth. Also, if you want to play Guess the Dow, jazzwealth.com/Guess the Dow. We're giving out $100 to the person who is closest without going over. Tomorrow, we will find out again. Well, we announce them on Mondays, but on Mondays, we'll announce the winner there. And do we have a scoreboard? Do we do that? Is that Thursday scoreboard? Okay, so tomorrow we'll have a scoreboard so you can see where you stand. Top 5 people? Top 5 people. Okay, so we'll get into that tomorrow, but you're welcome to play. No strings attached. We are not fancy enough to have any slick follow-up marketing or sell your emails or do anything. Small fish, right? So we're just happy you're watching. So play along if you'd like. All right, the S&P, there's not a whole lot to cover stock market-wise. Individually, of course, there's a lot going on. But if we take a look at the S&P, there we go. What we have here is a good old-fashioned low-volume rally. All right, we have a market moving higher on ever-decreasing volume. Now, is that a good thing or a bad thing? You don't know? So normally what technicians would say is, wait a minute, a market moving higher on lower volume lacks conviction. Oh, okay. We need higher volume to push the markets higher. And that, honestly, I ought to believe the same thing there. Now, I've done a class on this in the past, but for example, over the last 5 years, if you only had your money in the market on low volume or below average volume days, you would in fact be sitting here 5 years later with a 450% gain. By the way, this is not possible to do. This is just analytics, right? We're just trying to make a point that lower volume days are actually okay. It's fine if the market goes up that. If you had invested only on above average volume days, meaning the volume was above average and predictably more volatile or something, you'd actually be down 72%. So you put $1,000 in, hey, you would have lost $720. You say, well, Dustin, that's over the last 5 years. That doesn't make sense. Let's go further than that. If you look out the last 25 years, this is not a typo, by the way. This is accurate. If over the last 25 years you skipped all the high volume days and you said, I'm just going to be involved in the boring low volume days and I won't be a part of the high volume days, your account growth over the last 25 years would have been 36,438%. That's not a typo. Again, you can't do this. I'm making a point. Hold on. If you were involved over the last 25 years, you invested $1,000 and you were only in the market on high volume days, you would have lost 98.2% of your dollars. So that comes, let's go back to the beginning point there. It goes back to the point of, hey, low volume, grinding markets. All right, that's fine. We're happy to be a part of that. It's not exciting. We want the excitement of the high volume blast off days, but it goes to show that these days are not to be messed with, right? That's where some good returns obviously can be made there as well. So that's what we have in the S&P, and now you know why, and now you know that from a purely, historical standpoint there, low volume market rallies are not a bad thing. So the technicians would have had that wrong. I would have said the same thing, so I would have been wrong. And you just hope it wakes up at some point. Now, will it wake up? Look at the stock market here. We've got the stock market We are sitting at a known technical resistance area. That explains the low volume. Who in their right mind wants to be the first person to buy here, assuming that the market is going to blast off? What do you have? What catalyst do you have to go by? Maybe earnings, but so far that hasn't done the trick. It's going fine, but it hasn't done the trick. So that's what everybody's waiting for. We're waiting for that next sort of all clear sign where everybody can jump in and push the markets higher, and likely it's going to happen all in one day or over the stretch of an afternoon or something where we do break above. And as that happens, more and more people go, oh, okay, cool, we're not stuck here anymore. Yeah, I put a few dollars in. That's good. That's the mindset. That's what's going to happen there. So we just have to wait, right? There's not much more to say there. If we look at the NASDAQ is in the same exact position, although noticeably stronger, of course. It is the best performing index year to date. It's just consolidating here, lower or below average volume, and not much happening. So that's not a bad thing. I would have previously said, oh, I feel like there's some worry here. Why did people stop buying? Something's going on. And then, of course, the Dow finds itself in a very similar position, where it's up at a known resistance area, just a little extended. The healthcare stocks took it up there, and well, now the healthcare stocks are taking them back down. Look how quick United Healthcare has retraced, right? Well, that's weighing on the Dow, right? Look at, what was it yesterday? Caterpillar didn't do much, actually. It finished almost positive, so I won't use Caterpillar as an example. The mess of Goldman Sachs yesterday. Okay, well, that's holding things back a little bit. Some of the earnings today that we had. And so that's a reason why you've got the Dow unsure about breaking above those highs. Put the pieces together now. In the Dow, did it fall? Right? So let's take a look at this way. The Dow rallied up because of the higher price stocks. So the Dow is a price-weighted index. The higher the price, the more say you have. And so that got it to this point right here. What got it there? Names like United Healthcare. But United Healthcare is retraced. Well, that's interesting. But the Dow didn't fall. So why didn't the Dow fall? Because the other stocks had good days while United Healthcare was pulling back. What happens if United Healthcare has a 3 or 4 day stretch that's really good? That's your recipe for the Dow to move above those highs, because United Healthcare is $500, right? So that's what you look at when it comes to the index not pulling back, stocks pulling back. Uh-oh, what happens when it rallies? There's the strength, hopefully, that gets it to blow above the highs. Okay, rambling here to start the day. Let's get going back over here. Still got the charts, perfect. So we covered the NASDAQ, covered the S&P. Gold actually kind of uneventful, sitting at highs, I'll give it that, but chopping around here, a little bit of a loss on the day. Russell 2000 is the laggard. It's, having a hard time getting going, and likely will because of the small banks. You want a fun fact? So, fun fact here, since yesterday's close, there were 23 names that reported earnings. That's not a lot, but it'll get more busy there. If you look at all the names together, the beat rate on earnings was 65%. Not great, not bad, about average. If you take out the small banks and you say, what about the rest of them? 100% of those names beat on earnings. So it tells you, what data point do you pay attention to? If I were to just say 65% of names yesterday beat on earnings, you'd go, well, I don't know what to think about that. But if I tell you 100% of all names that were not banks beat on earnings yesterday, whoa, we painted a pretty rosy picture there, right? So keep your mind wrapped around what's happening in the small and mid-cap space. What we have is those small banks, aside from today, not so good. It's not going well there, and that's holding the Russell 2000 back. Yeah, that's all I wanted to say there. Lastly, we got oil pulling back off the 200-day moving average. You had crude oil inventory numbers come out. Great reason for this to pull back just a little bit, and volatility making a new low. So somebody brought that up the other day. I'm just helping kind of follow up there. I don't know if you guys like looking at that. I do, but I don't know if it's that interesting. Today it made a new low. There is very little fear in the market, and we talked about that going into earnings season. This earnings season is predicted to be the weakest in terms of total loss of earnings in the market, S&P as a whole. However, nobody's fearful because we all think it's the trough or the low, the bottom, whatever. So the level of fear is just not there. Not only that, do you want to be somebody that's participating in this when we could potentially break out above highs? That's a tough one. So I want to have a hedge against my portfolio right here. Like at this point, you want to have a hedge maybe somewhere when they're showing real weakness. Just not seeing that at the moment. What else do we got? Something a little offbeat here. Stealing some of the data from Indeed.com. They have their new job postings. They put this data out and it's readily available to us, so I'll share it with you here today. If we look at the Indeed.com postings here, this is broken down by region of the United States. If you look around, we have new job postings obviously declining, except for out west. I don't know what's going on out there, but if you look in the short term here, not a real pullback out west. Everywhere else, job postings are on the decline there. If you look inside of that data and you're curious if you're on the chopping block, here's a breakdown of the areas or industries with the largest pullbacks in job offerings there. We would have guessed software development, but human resources, marketing, those are interesting because that's a sign of companies pulling back, not wanting to expand, maybe taking it easy. When they fire marketing and they fire human resources, hey, we're not hiring as many people. We don't need you to go hire or fire people. So interesting there. And just thought I would plot that for you and take their data. It's not mine. Something to share with you. That's also one of those things, we like to watch everything for maybe a heads up. You know what I mean? Like okay, wow, we're going back towards the baseline for marketing companies. So it's back to normal. We had our COVID spike and now it's back to baseline. So marketing companies are likely to start seeing the benefits or the impact financially of having reduced their workforce, right? Not hiring as much. So we like to watch all these different things, whether they're relevant to you or not. Well, I don't know unless you yell at me and tell me. All right, stocks in the news here. Here we go. So Netflix reports earnings, and I have the wrong thing up here. So this came out after hours yesterday. Excuse me. You got Netflix earnings and 1.75 million new subscribers. That's a little bit light. 2.6 was what was expected. What was positive, I thought maybe would cause the stock to sort of replenish the losses after hours there, was they said, we expect our free cash flow. Previously, we said it would be at least $3 billion. Now they're saying it will be at least $3.5 billion. So there you go. Profits are not the issue there. Small beat on earnings, and that's what you have out of Netflix. If you're a password sharer, then you're happy to hear that the media chose to focus on that instead of the fact that, hey, we're speeding up our buybacks. We're buying back shares. We've got enough cash to do it and keep developing. But wait, we can't say that and say that we need to stop the password sharing so that we could develop more content because we don't have the money. So it depends on where you looked with what information you got yesterday, but that is the American media at its finest. If we take a look over here, there you go. You could see it there. United Airlines was a loss, just a lot smaller than expected there. Essentially, they beat earnings. We were expecting them to lose. They did, but they didn't lose as much. Okay, so they beat on earnings there. It was off by 13%, so it gives you an idea how much we were thinking. Total capacity, that beat, so people on airplanes there, but the revenue that they made per passenger per mile. You know how every time earnings seasons come around, I talk about the metrics people like to follow. Revenue per passenger per the seat mile is how you would say it. So revenue per passenger per mile, but if you want to look it up, it's per seat mile. That was, in fact, lower there. Now, they guided higher because they said, okay, we didn't make as much money per person, per seat, per mile, but this quarter, we have more capacity. So we're stuffing more people on these planes, which means even if we make the same revenue per passenger per mile, there'll be more passengers, therefore we'll make more money. Did I ruin that? Did you get that, Cody?
Yeah, I totally followed you on that.
You totally followed me. Okay, good. So there you go. Good for United Airlines there. Stuff more people on airplanes, make the same amount of profit per person means you make more profit in total. Okay, good. We're back to where we need to be. Disney laying off a bunch of people, and ESPN is going to be one of those areas where they get the chopping block as well. Fun fact, went to high school with a kid. I think he's still on ESPN. He's one of the more popular guys. Is he?
Yeah. He's up. Yeah.
Is he not popular?
He is, but his guy was Brady. He had all the Brady news.
Oh,
Brady's
okay.
not around anymore.
So he's got to find a new guy. Okay.
Yeah.
Well, anyways, went to high school with him. He was like the valedictorian or something. Turns out he's ESPN commentator. He doesn't know me, but maybe he does. I don't know. He was in the smart people classes. I was in all the money classes. Fun. That's a true fact.
It worked out for both of you.
It worked out for both of us. Yeah, he took Chem 2, I took business math.
Way more fun.
I find like it worked out. Meta, more layoffs coming from Meta. Now, this is where we get into, whoa, what's going on? Like before the first couple rounds of firing, you're like, yes, okay, they're taking this seriously. They're not going to invest in the metaverse so much. They're going to actually do what they do and make some money. Now it's like, whoa, okay, we didn't need you to pull back that much. Go, continue to grow. That's the pressure now on the stock is, are they overdoing it here? Is this a little much? How sensitive Wall Street can be, huh? And then you got Ally Bank here. There's a lot we could have covered today, lots of different names. Of course, there's tons of earnings out there. I was going to talk about Traveler. They raised their dividend. They're buying back more shares. But Ally Bank I thought was interesting because I know a lot of you are dealing with them in some way. It was fine. Earnings were basically fine. The reason that they ultimately missed expectations is in the auto loan division. And you can see this in their transcripts if you want to look. They actually said a little bit soft. They were off by 7% there because they'd invested heavily into client acquisition for auto loans. That's a fancy way of saying we spent a little too much on marketing and it didn't drive the results we were hoping for. So slight miss there, but I don't think there's any real problems there myself. Tonight, we're going to talk about what we talked about yesterday, the market pullback, right? When you have a pullback that refuses to make a new low, we're going to talk about that data there, and then lots more cool things coming up for you if you're interested. I'm going to pop out the questions here, see if I can answer some questions, and hopefully we can do it there. Yeah. You guys are passing notes during class there? Yeah, I like the next one there. Do kids still pass notes in class? Yeah, right? They do it. Send texts, you write something down. I love it. Ooh, okay. Now you're picking on the kids there. They don't know how to write. Hey, Jazz, will help your number if I watch a replay of the show sometime after I watch the live show. Dude, I don't know. We do this stuff. If there's more numbers or more people watching on YouTube, we don't know why. You know, like we don't have those people here. You might be thinking of the other guys that analyze all the, the videos out there and then just do the same video. But I couldn't tell you. You can try it. I appreciate you asking, but I'm assuming, it can't hurt. I always wonder that too. When I watch one of our videos, if there's an ad, am I in trouble? Like, I don't watch the whole ad, but...
Watch the full ad.
Watch the full ad?
Yeah, if we get an ad, if I'm watching one of our videos, I watch the full ad.
Oh.
Yeah.
Okay.
Every penny counts.
Oh, all right. So, there you go. I just thought I'd get in trouble. I'm always worried about it. Like, no, it's me. Don't... Well, you get distracted during the live show. Yeah, me too sometimes. I have often come across many times where I'm talking and I'm thinking about the next thing that I want to talk about, and I realize I said some of it while I was talking, and, I'm sharp enough for it to hit me, and I bounce back. But, yeah, I know the impact of getting distracted. Yeah. Okay. That's okay. Slow day here today. We know it. We're cool with that. Tomorrow, you have all kinds of Fed members speaking. Let me go over here real quick. 1, 2, 3, 4, 5, 6 different Fed members speaking tomorrow. So what do you think is going to be in the news tomorrow? Bright and early when you wake up. What do you think the world's going to focus on? 1, 2, 3, 4, 5. Yeah, 6 different Fed members. Florida, Ohio, Texas, Florida again, Pennsylvania, Texas again. Yeah, so they're spreading out. Why? We'll find out, because there will be something common that they all say in order to get you ready for the next Fed meeting. So we'll be on the lookout for that. And that'll likely help move the markets a little bit, which will be good for us there, huh? Okay, that's all I got. Enjoy the rest of your day. Thanks for hanging out with us and watching and subscribing and all that good stuff. We'll be back tomorrow to do it all over again. And we'll see you.